Welcome and thank you for joining today. We are diving into the world of time price opportunity charts in RTrader Pro. By the time we are done, you will know exactly how to use these charts to improve your trading. We will explore how to set them up, how to read them, and how to use them to make smarter trading decisions. So, get ready, stay tuned, and let us jump right in. Have you ever wondered how to truly understand where the market finds value and why prices pause or reverse at certain levels? Time Price Opportunity, or TPO, is a powerful tool that helps you do just that by revealing where the price of an asset spent the most time during a trading session. Imagine being able to glance at a chart and instantly identify where most of the activity happened, giving you a clear picture of where the market is finding value. This insight is crucial for making informed trading decisions. TPO charts also help you spot key levels that can act as support or resistance areas where the price might pause, move significantly, or even reverse direction. By highlighting these levels, TPO charts make it easier to understand the market structure and behavior. Unlike traditional charts that show only how much a price moved, TPO charts emphasize how long the market stayed at specific levels. This gives you deeper insights into market sentiment and potential areas of interest. Let us expand on the chart patterns that TPO charts can reveal. One of the most important patterns is the ** bell-shaped distribution **, which indicates a ** balanced market **. In this type of pattern, the TPO chart has a shape similar to a bell curve, showing that the market is finding fair value at the middle of the distribution. This suggests that buyers and sellers are in agreement, and the market is likely to move sideways within a predictable range. When you see this pattern, you can anticipate that price movements will remain contained within the high and low of the value area until new information comes to drive the market in one direction or the other. Another important pattern to recognize is the ** double distribution **. In this pattern, the TPO chart shows two distinct bell curves during the same session, with a clear separation between them. This often happens when new information enters the market, causing a sharp move away from the initial value area and creating a new area of balance. When you see a double distribution, it signals that the market sentiment has shifted significantly. The area between the two distributions often becomes a low volume node, which can act as either support or resistance if the price returns to that level. The ** P-shaped ** pattern is another valuable structure to watch for. A P-shaped TPO chart typically occurs during a short covering rally, where traders who were previously short begin to buy back their positions, driving the price higher. This pattern indicates that there was aggressive buying after a period of selling pressure. The long vertical tail on the bottom of the P-shape shows where short sellers were forced to exit their positions, while the body of the P represents the new value area that emerged as buying continued. If you spot a P-shaped distribution, it can suggest that the market may stabilize after the initial buying pressure, but be ready for potential pullbacks if there is no follow-through. Conversely, there is the ** B-shaped ** pattern, which often indicates long liquidation. In this case, the TPO chart has a long vertical tail at the top, followed by a wider base at the bottom. The B-shaped pattern typically appears when traders who were long begin to exit their positions en masse, causing a drop in price. The lower portion of the B-shape becomes the new value area as the market finds a level where buyers are willing to step in again. Recognizing this pattern can help you anticipate further weakness if there is no new buying interest to support the price. Another critical pattern is ***, single prints ***, or ***, thin zones ***, which occur when the price moves very quickly through a certain level, leaving behind only one or very few TPO letters in that region. Single prints indicate a lack of acceptance at that price level, which means that the market moved through it too fast to establish value. These areas are crucial because they often act as gaps in the market profile, and price tends to revisit and fill these single print zones at a later time. Traders use these zones to identify potential support or resistance, as they can represent areas where the market might struggle to move through again. Lastly, the ** trend day profile * is an essential pattern to understand. On a trend day, the TPO chart shows a clear one-sided movement, with the profile extending mostly in one direction without much overlap between successive TPO periods. This kind of profile indicates strong directional conviction, often driven by high-impact news or a significant change in sentiment. During a trend day, the market is unlikely to return to the initial balance or value area, and traders should focus on trading in the direction of the trend rather than trying to fade the move. The initial balance, or the range established in the first hour, can serve as a launching pad for the day's movement, and breaks of the initial balance often confirm the continuation of the trend. Recognizing these TPO chart patterns can provide traders with valuable clues about market sentiment, possible reversals, and continuation opportunities. Understanding how to read and interpret these patterns allows you to plan your trades more effectively and manage risk with greater precision. Whether you are spotting balanced versus imbalanced structures, identifying single prints, or recognizing a double distribution, these insights can make all the difference in improving your trading performance. Now, let us set up a TPO chart in RTrader Pro. If you have RTrader Pro open, go to the Charting section. You will see an option for TPO or Market Profile. Click on that to open a new chart window. You are going to want to choose a time frame that works for your style. Are you a day trader or a swing trader? Or maybe you are focused on long-term trades. You can set your TPO chart to daily, weekly, or even intraday views. This gives you flexibility. It allows you to look at the market from different angles. And trust me, the right angle can make all the difference. Once your chart is up, it is time to make it your own. Customizing it is simple, and making these customizations can significantly improve your analysis. You can adjust the time intervals of the TPO blocks to suit your trading style. Most traders use 30-minute intervals, as this is the standard, but do not be afraid to experiment. If you are looking for a more detailed view, you can reduce the intervals to 15 minutes or even smaller to capture more granular movements in the market. Conversely, if you want to get a broader sense of market structure, you can use hourly or longer intervals to smooth out the noise and focus on bigger trends. Another key aspect of customizing your chart is setting up crucial levels. This includes levels such as the point of control, the value area, and the initial balance. The point of control is critical because it marks the price level where the most trading activity occurred. This is often an area where the market finds fair value, and it acts as a magnet for price action. Similarly, the value area is crucial because it represents the range where 70% of the trading activity took place. Knowing where this range is can help you identify the boundaries of fair value, which can act as key support or resistance zones. You should also consider marking the initial balance, which is the price range established during the first hour of trading. This level can provide insight into early market sentiment and serves as a benchmark for potential breakouts. It is also beneficial to set alerts for these key levels so that you are notified when price approaches them. This allows you to stay ahead of the market without needing to constantly monitor the chart. Another powerful customization is the ability to adjust the colors of the TPO blocks in RTrader Pro. Customizing the colors can make the charts easier to read, especially if you want to differentiate between various trading sessions or emphasize specific price levels. For example, you might choose to color the point of control in red to make it stand out, or use different shades for different trading days. This visual customization helps reduce the cognitive load while trading and makes it easier to quickly spot significant areas. In addition to these adjustments, you can overlay other indicators such as volume profiles. Combining TPO charts with volume can provide an even deeper level of insight by showing not only where price spent time, but also where the highest volume of transactions occurred. This combination of time and volume helps confirm key levels, adding another layer of reliability to your analysis. The more you adjust the chart to fit your needs and trading style, the more intuitive it will become, allowing you to react faster and make more informed decisions. Let us talk about some key features of TPO charts in RTrader Pro. There are three main things you want to focus on. These are the point of control, the value area, and the initial balance. The point of control is the level where the market spent the most time during a session. This is a key spot to watch. It often acts like a magnet for the price. When the market comes near the point of control, it tends to react strongly. The value area is the range where most trading occurred. This area is a big deal for traders. It usually acts as support or resistance, and you can use it to plan trades. Finally, the initial balance is the range of the first hour of trading. This is something that can really help intraday traders. If the price breaks out of this range, it can signal a stronger move for the day. Paying attention to this can help you catch early moves. How do you actually read a TPO chart? Well, you want to understand how the market is behaving. In a balanced market, the TPO chart will look a lot like a bell curve. This means buyers and sellers are in agreement. The market is balanced and may just be moving sideways. In an imbalanced market, the chart will look more stretched. This means the market is trending. Price is moving quickly between levels, and it is important to know when this is happening. You will also want to look for something called single prints. Single prints show up when the price moves through a level very quickly. These areas are key because they can act as support or resistance if the price comes back later. Knowing how to spot a balanced market versus an imbalanced one will help you make better choices. Now let us talk about some strategies for using TPO charts in RTrader Pro. One of the popular strategies is called reversion to value. This is a strategy where if the price moves outside of the value area but then comes back inside, it often rotates through the entire value area. This rotation through the value area means that the price is likely to move from the value area low to the value area high or vice versa, giving traders opportunities to profit from these predictable movements. You can use this to your advantage by trading between the high and the low of the value area. To effectively use this strategy, patience is key. Wait for the price to return to the value area and observe if it sustains its position within the boundaries before taking action. Another strategy is the breakout strategy. When the price breaks out of the value area or out of the initial balance with strong momentum, that is usually a sign that a trend is starting. This type of breakout typically occurs when new information or a significant market catalyst drives interest, leading to increased buying or selling pressure. You will want to look for volume confirmation before entering, as this helps to ensure the breakout is genuine. Strong volume means that there is sufficient participation in the move, reducing the likelihood of a false breakout. When a breakout occurs on low volume, it often signals a lack of conviction, and the move may not hold. When a breakout occurs with strong volume, it indicates genuine interest and strength in the movement, giving you greater confidence in entering the trade. To further enhance your understanding of breakouts, it is also important to note the concept of retesting. After an initial breakout, the price may often return to test the breakout level before continuing in the direction of the trend. This retest can provide an even better entry point, especially if accompanied by volume confirmation. The retest allows traders to enter the market with a tighter stop loss, minimizing risk while confirming the strength of the breakout. In addition to retesting, you should also be aware of the concept of consolidation before a breakout. Often, the price will move sideways in a narrow range, creating a consolidation zone right before a major breakout. This pattern indicates that the market is building up energy, and once it breaks out of this range, the move can be powerful. Consolidation before a breakout is often characterized by a decrease in volume followed by a surge as the breakout occurs. Watching for this build-up and subsequent release can help you anticipate strong directional moves. Another useful pattern related to breakouts is the concept of a measured move. Once the price breaks out, you can often use the width of the prior trading range to project a target for the price movement. For example, if the initial balance range was 50 points wide, a successful breakout might be expected to move at least another 50 points in the direction of the breakout. Using measured moves provides a way to set reasonable profit targets and manage expectations for how far the price might move. Understanding these nuanced patterns and applying them effectively will greatly improve your ability to capture breakout trades and increase profitability. Finally, there is the point of control reversion. If the price is moving toward the point of control, it is very likely to react at that level. It might reverse, indicating that the market perceives the point of control as fair value, or it might break out if there is strong conviction. Either way, this is a key level to watch. Often, the point of control acts as a magnet for the price, pulling it in, after which you can observe whether there is a bounce or a continuation. This makes it an excellent level to plan your entries or exits, as it provides valuable context for understanding market behavior. Another important pattern to watch for in TPO charts is the concept of the initial balance breakout. The initial balance, which is the range formed during the first hour of trading, serves as a critical reference point for understanding early market sentiment. If the price breaks out of the initial balance with significant momentum, it can signal the start of a strong directional move. The key here is to assess whether the breakout is supported by increasing volume, as this provides validation of the strength of the move and helps reduce the risk of a false breakout. Initial balance breakouts are often accompanied by periods of trend expansion, where the price moves steadily in the direction of the breakout. It is also important to watch how the price behaves after breaking out. Sometimes, the price may retest the initial balance boundary before continuing in the breakout direction, which can provide an excellent secondary entry point. This retest can be crucial as it not only provides an opportunity for traders to enter at a favorable level, but also confirms the validity of the breakout. Traders should watch for buying or selling activity during the retest to see if it aligns with the breakout direction, as this can provide additional confidence in the move. When trading an initial balance breakout, it is useful to set targets based on multiples of the initial balance range. For instance, twice or even 3 times the initial balance range can often serve as potential profit targets. This concept of using multiples of the range helps in setting realistic goals and ensures that you are capitalizing on the potential strength of the breakout. Additionally, keeping an eye on key support and resistance zones beyond the initial balance can help in managing trades and determining when to lock in profits or adjust stop losses. These zones often coincide with areas of previous high activity or significant price action, which makes them logical points for potential reversals or pauses in the trend. Another interesting pattern to look out for in relation to the initial balance is the presence of extensions. Extensions occur when the price continues to move beyond the initial balance range, indicating strong continuation potential. Identifying extensions early in the session can help traders stay in a winning position longer and avoid exiting too soon. These extensions can often lead to trend days, where the market shows a persistent move in one direction with little pullback. On trend days, the market's movement can be relentless, and recognizing the signals early, such as the breakout beyond the initial balance and subsequent extensions, can make a big difference in capturing significant profits. Moreover, it is essential to understand the concept of failed initial balance breakouts. These occur when the price initially moves beyond the initial balance range, but quickly reverses and returns inside it. A failed breakout can be a strong signal that the market lacks the conviction to move in that direction, which often results in a sharp reversal back into the previous range. Traders can use this as an opportunity to trade in the opposite direction, with the expectation that the price might revisit the other side of the initial balance or even the point of control. This type of movement can provide excellent risk to reward scenarios, as failed breakouts often trap traders who entered expecting a trend to develop, thereby fueling the reversal. Finally, be mindful of initial balance with as an indicator of the day's potential volatility. A narrow initial balance suggests that the market may be primed for a significant breakout, as there is relatively little consolidation to contain the price. In contrast, a wide initial balance may indicate that the market has already digested a lot of information, potentially leading to a more range-bound session for the rest of the day. Understanding the context provided by the width of the initial balance helps traders gauge what type of day it might be, whether it will be a trend day, range day, or even a volatile breakout scenario. Adjusting your trading strategy based on this information can enhance your ability to respond appropriately to market conditions. Another useful pattern to recognize is the failed breakout. This occurs when the price breaks out of a level such as the value area or initial balance, but then quickly returns inside that range. A failed breakout often signals a lack of strength in the move and can lead to a reversal in the opposite direction. When you identify a failed breakout, it can be a good opportunity to trade in the opposite direction, with the expectation that the price will return to the opposite boundary of the range. This type of pattern is particularly effective in markets that tend to oscillate between support and resistance rather than trending. Finally, pay attention to the presence of tails in the TPO charts. Tails occur when the price moves quickly to a level and then sharply reverses, leaving behind a thin profile in that region. These tails indicate rejection at that price level, meaning that buyers or sellers were unwilling to transact heavily there. Tails are significant because they mark areas of strong support or resistance. If the price revisits a level where a tail was previously formed, it is likely to see a similar rejection, which can provide an excellent entry point for a reversal trade. Recognizing tails and their significance is crucial, especially in volatile markets where rapid price movements are common. TPO charts work well on their own, but they work even better with other indicators. One good combination is using TPO charts with volume profiles. Volume profiles show you how much volume was traded at each price level. Together, these two can give you a really clear picture of key levels and trends. Another helpful indicator is the moving average. If the price breaks out of the value area and crosses above a moving average, that is usually a strong signal that the trend will hold. And do not forget momentum indicators. Things like relative strength index or moving average convergence, divergence are also great for helping you confirm breakouts or reversals. Adding these tools to your TPO charts gives you a better chance of making a confident decision. Here are some practical tips to help you make the most of TPO charts in RTrader Pro. Focus on the value area. The high, the low, and the point of control are key levels that deserve most of your attention. Watch how the price behaves around these levels for good trading opportunities. Breakouts are also something to keep an eye on. If the price breaks out of the initial balance or the value area, it can mean that a trend day is underway. You should be ready for these kinds of moves, especially when you see volume increasing. Lastly, do not ignore tails and single prints. They can tell you a lot about fast moves in the market, and they often become good spots for future entries or exits. Risk management is important. No matter what tool you are using, managing your risk is key. With TPO charts, you can use the boundaries of the value area or the point of control as natural places to set your stop loss. This helps protect your position if the market goes against you. In a balanced market, it might make sense to keep your stops tight since there is not as much movement. But if the market is trending, you might want to give it a bit more room by placing your stops a bit further. When you're taking profits, think about doing so near the boundaries of the value area or at the point of control, since these levels often act as natural price targets. Let us talk about some common mistakes to avoid. First, do not overreact to every small move. Not every movement outside of the value area is worth trading. Be patient and wait for confirmation. If the move is backed by volume or other indicators, that is when you want to take action. Another mistake is ignoring the broader market context. You always need to be aware of the bigger picture, including economic news or other market factors. These can have a big impact on how the price interacts with TPO levels. Finally, never skip confirmation. Before entering a trade, use additional indicators like volume or moving averages to back up what you see on the TPO chart. This extra step will save you from false signals and improve your results. The best way to get comfortable with TPO charts is to practice. Start by using a demo account. This will let you learn how to identify key levels like the point of control and the value area without risking real money. Practice until you feel confident about what you are seeing. Then keep a journal. Write down why you entered or exited each trade. Over time, you will be able to see patterns and find out what works best for you. Lastly, experiment with different time frames. Try using daily, weekly, and intraday charts to find what provides the best insights for your strategy. The more you practice, the better you will become. To sum everything up, TPO charts give you a unique way to view market structure. They show you where price spent the most time, and the key levels like the point of control and the value area can help you make better trading decisions. Start by setting up your charts and customizing them to fit your needs. Pay attention to the key areas we discussed and use other indicators to add confidence to your decisions. With time and practice, you will start seeing the benefits in your trades. Keep refining your skills, stay focused, and do not hesitate to ask questions or share your thoughts. Trading can be challenging, but it is also rewarding, and the more you learn, the better you will get.